What's up, guys? Dirk here. Happy Monday. It is September 19th. The weekly candle has just closed. So as usual on the channel here on the Monday, we look at the candle close, what it reveals for the week and the multiple weeks ahead. So let's dive straight into this week's content. If you are new to the channel, welcome. Please consider subscribing down below. Click that notification bell after you subscribe so that you do get alerts whenever I upload a video. And if you want to be sure to never miss a single video, just get on my email list. It's the first link in the description down below. Click that, enter your name and email. That way I can let you know via email every time I upload a new video. And of course, you're welcome to follow on Twitter and Instagram and join our free public Telegram. The links are in the description down below. All right, so Bitcoin is trading at 18,400. We are almost back at the June lows, and it is the 19th of September. So I have been saying, I made this video several weeks ago, back in August. I was saying the chance of a crash in September is pretty high based on the historic data. September is just usually a very bad month for stocks and for crypto. And of course, this year is also a midterm election year where September is basically the worst month for stocks in this year on average for midterm election year. So obviously Bitcoin follows the stock market, altcoins follow Bitcoin. So if the stock market is going to go lower, Bitcoins go lower, everything is just basically going lower. And that was predicted. I've been talking about that for the last months, actually, even after we had the June low. Okay, so I said based on that data, we had the 3-day death cross, we got the wick low over here in June, and that ended up being exactly on point. We got that rally. Then at the top of this rally, when we started seeing negative divergences on the 12-hour chart, I made a video about that too, saying, hey, the local top is in, and we've been going down. We got that bounce over here, which we also caught on the 4-hour chart, and now we are back down, and we are heading towards the last 2 weeks of September. There's not even 2 weeks left, and it does really look like there's danger for further sell-off at this point. And basically what we're looking at is what I've been saying for quite a while over here. There is this fair value gap or this imbalance around this level. It is also the resistance over here in 2018 and in 2019 and in 2020 before we finally broke through. And it is actually looking like it is very much a possibility that we could end up retesting that level somewhere between $10,000 and $14,000. And it might actually be possible that that can happen within the next couple of weeks, or maybe even still within September. All the charts are basically just pointing down. You can see we've been talking about this for a long time. The 200-week moving average, that is important. Okay, when we reclaimed it over here, there was a chance that that could stay bullish as long as we could continue to reclaim that and stay above it. As soon as we broke back down below it, that was a bearish signal. We could not reclaim this 200-week moving average. We tried to even bounce up here and try to retest it from below. It didn't even get there. It failed, and now we're breaking these lows, and there is not much needed for a major sell-off at this point, especially if the stock markets are going to sell off too. This week is going to be a massive week in terms of news because we have the very much anticipated US FOMC. So the interest rate decision in the US is going to be announced this week in the next couple of days. I think I think it might actually be in a day or two. I don't have the exact date in front of me, but this week for sure. And we haven't had an interest rate decision for the last 2 months. So everyone is watching that, and they're actually anticipating that it could be more aggressive than anticipated, meaning, you know, the Fed has still made it clear that they want to fight inflation, which means they're not going to be dropping rates anytime soon. That is basically the expectation behind it. And of course, if they are going to continue this aggressiveness and even continue to increase rates, that is generally a bad thing for the stock markets. And what's going to be bad for the stock markets is going to be bad for Bitcoin. So basically the charts are pointing towards us having a lot of potential downside here. Again, it's not a 100% guaranteed thing. You know, you never can say anything with 100% certainty in terms of predictions over here. But as long as we're below this 200-week moving average, the trend is still bearish. And the next major level of support, in my opinion, would be somewhere between $10,000 and $14,000. So that is basically still in play. Even if we go and look at the 3-day chart over here, just zoom in the time frame, it gives you just a little bit of a different picture over here. And again, we got rejected by this 50 moving average, the blue, just 50 simple moving average. And here we didn't even get to it and it got rejected already. And again, this just looks like it wants to roll over. And I think it's going to be a good thing if it does, because it'll finally flush everything out. And we might get a bullish divergence where the price makes a lower low, but the RSI makes a higher low. That creates bottoms in the same way over here, right? I've talked about this many times. Bullish divergence is what we want to see to get this bottom in. So if we can drop and we can flush it down to somewhere between 10 and 14,000, we create a bullish divergence. That could actually end up being the final low that we are looking for. And then maybe we see some sort of recovery in Q4 with the midterm elections. That tends to be a bounce on average for the stock market. So that is still a possibility. And we're just going to have to take it a step at a time. But I would like to see lower lows in price with a bullish divergence forming on the daily, the 3-day, and maybe even on the weekly time frame. You can actually see we've kind of already got it over here, where the price is here slightly lower, but the RSI is not confirming it. So it would be nice to get a quick wick down, the recovery, and then hopefully that will be it for the bottom of the bear market. And of course, after that, we're going to have to wait and see. We're going to get a quick snapback recovery, like a big rally like we did in July of last year. Or is it going to be more of a prolonged sideways trading in a range for 3 to 6 months or maybe longer before we can start the next leg up? That's obviously what we're going to have to wait and see, and take that, a month at a time, a week at a time, even a day at a time, and just see how the charts develop. So Bitcoin doesn't look too great at this point. Ethereum also, if we're looking at the 3-day chart, you can see it even more clear over here. The 3-day chart, the 50 moving average here in blue, you can see it got rejected over there in April and it sold off massively. It tried to reclaim it twice over here. You can see it tested it here, got rejected both times, and now we're heading down. And again, basically, I'll show you on the weekly chart. We're on the 200-week moving average right now, but if we break below that, I think this can still go lower. I think we could see new lows on Ethereum, and I still think in some sort of market sell-off, which is still a potential in the coming weeks, that we might actually still end up seeing Ethereum go to somewhere between $300 and $500 for a final low, which at that point, obviously, we're going to have to wait and see. Nobody knows for sure, but that could end up being the ultimate buying opportunity, just like it was back in the 2018 bear market, where you got the chance to be able to buy Ethereum under $100. And if you would have held that all the way to the top of the next bull market, less than 3 years, you could have turned that into a 50x return. So I do still believe that Ethereum can have another major run, but it might still end up going a lot longer. So we're going to wait and see for that maximum opportunity. And basically the bullish scenario, or the confirmation that I always talk about, is look, the trend is bearish. We are in a bearish trend since last year. And until we get bullish confirmation, simply just respect the trend. The trend is your friend until the end. So until we get that bullish confirmation, in this case, very simple, on the 3-day, the 50 moving average, reclaiming that would be a good start to potentially looking at a new bullish trend. For now, we got rejected here, we got rejected. We've been below it ever since we broke below it by the end of last year. So 30 December, we broke below it, and we've been below it ever since. And maybe we go back, if we zoom out a little bit, we can go as low as these levels. You can see over here, somewhere between $300 and potentially about $500. So let's wait and see how that develops. The merge, obviously, this was a whole big pump leading into the merge. The merge is done now. It's like I said, it was probably a buy the hype and sell the event type thing, and that's exactly what ended up happening. So that is the 3-day chart. Let's have a look here at the weekly chart, and you can see that Ethereum, it went below the 200-week moving average here in red, simple moving average on weekly. It bounced, it pumped up to this exact level over here, which, like you saw, it was the 3-day 50 moving average, got rejected. We're right back on that 200-week moving average. We break down below it. I think we go to new lows. And like I said, somewhere between $300 and $500, if we get a major market sell-off, could be the final low target for this bear market. And that also coincides with the same percentage drawdown, or a similar percentage drawdown, as we saw in the 2018 bear market, where, let me pull that up for you, where you can see over here from the peak in 2018, January 2018, you can see over there that dropped roughly about 94% from the all-time high. That's Ethereum, right? And if we see that again Okay, so we take this, we drop that about 94%. Where does that take us? Yeah, you can see right to about $300. So it is not an unrealistic target, okay, at all, in my opinion. Obviously, we'll have to wait and see if it's going to get there. But you can see over here at this level how much support there is and resistance over multiple years. So if we do get some sort of sell-off, I would say, let me get this rectangle. I would say that like this kind of zone over here would end up providing ultimate support and might end up being the best buying opportunity that we are going to get on Ethereum. So I'm still patiently waiting. Like I said, in the same way, just wait. If you want to get bullish, wait for a reclaim of this 50 moving average on the 3-day chart, because that is a much more high probability indicator that we might be flipping the trend. As long as we're below it and we keep getting rejected, you know, the trend is still down. You can see it. It's just going down all this way. So maybe we will end up over here somewhere between $300 and $500 somewhere in the next couple of weeks. Who knows? Maybe if things go crazy, maybe even still this month. But for now, you know, that is basically how I'm looking at the markets, at this chart. The trend is bearish. We're under these moving averages. Targets are a lot lower, and we should respect that until proven otherwise, until the charts give us confirmation that the trend is flipping, which, you know, an easy way, like I said, is the 50 moving average on the 3-day chart for Bitcoin, for Ethereum, for a lot of these markets. And just one quick look at the stock market, because I think that is leading the way, right? If the stock market is going to go a lot lower, Bitcoin and crypto are almost certainly going to follow, because that's just the correlation that there is. So you can see over here, the 3-day chart, we have broken back down below the 200 moving average on the 3-day, and that is not a bullish sign. That is pretty bearish. You can see over here, we broke it, we flip back above it. Okay, that's a great sign, right? Broke below it. Look how much that dropped. Okay, this was obviously March 2020, but you can see that was a 23% decline. So if we're going to get another 23% decline from here, you can see that's pretty brutal. That's going to take us down to about 3,100 or maybe even 3,000 on the S&P. If that happens, you know, what do you think is going to happen to Bitcoin? We're probably going to see that 10 to 14,000 on Bitcoin. And obviously the risk is really that, you know, we could still potentially see a repeat of 2008. So just zooming out over here, you can see even going back to 2001, when we get back below this 200 moving average, this is on the 3-day, you can see that risk is there for a major bear market in stocks, right? Same thing over here, 2008, we're below these moving averages. That risk is there. So we don't want to see the price below this 200 moving average on the 3-day, because yes, even though in this major bull market that we've had since 2009, right, this massive rally, every time it's been saved, it's dipped below it a little bit, sure, but we want to see this price get back above this 200 moving average ASAP, because if it doesn't, you know, worst case, we get some small wicks like this. We get a March 2020 event, we have a 2008 event, we have a 2001 event. It just doesn't look great as long as we're below those prices. So really keep an eye on this, set some alerts. You know, we reclaim this, we get back above this, and we can stay above it. Things are still okay. You know, there's still hope that maybe the Fed changes, whatever, and we can get another rally, which would be good. You know, a big melt up like some people are talking about. But as long as we're below this 200 moving average, it does not look great. We can change it to the weekly real quick before we wrap this up. You can see I've shared this for the last weeks already also on the weekly chart, and it's always the same on my charts that I show. So it's the 50 moving average and the 200 moving average in red, and you can see what happened over here. Same thing in 2008. Let me move it to a log scale, it's easier to see. You can see bounce, drop below the 50, move to the 200, bounce back to the 50, got rejected, back below the 200, and a massive bear market, global financial crisis. Okay, we have had a very similar thing, broke below the 50, went almost to the 200, bounced to the 50, got rejected, and now we are on the way down. If we get back below the 200 week moving average, the red here, so if we get back below 3,500 on the S&P 500, things are starting to look very dangerous. And at that point, we are literally in global financial crisis, bear market mode for a potential scenario. Obviously, we could see something like March 2020, where it wicks below it quite a bit, snaps back and rallies up. But keep in mind, that was a different environment where we were still fully in quantitative easing. The interest rates were low, and we were still in complete, you know, risk on money printer mode. At this point in time, the interest rates have risen quite a bit. The Fed is much more aggressive. Inflation is higher. So the Fed is saying they want to stay aggressive to combat inflation. So this time, if we go below it, the environment, financial environment, the global markets are very different to March 2020. So this time it might actually be more closer to 2008 or 2001. So we are not there yet, but again, like I said, set some alerts. We go below this 3,500, we get weekly closes below this 200. Things do not look good for the bulls at all. And of course, if we are going to drop 30, 40, 50% on the stock markets, who knows what is going to happen to Bitcoin? You know, I said 10 to 14,000. If this, drops another 50%, we might end up going even lower than that. So keep an eye on everything. Let's see what the Fed does this week with their interest rate decision. Let's see how this week plays out. And then, we take it a week at a time and we just continue to just basically look at what the charts are telling us and let them guide us. As long as the charts are telling us lower, we can take advantage of that by shorting or by selling rallies, or simply by just being patient and waiting on the sidelines and keeping our risk capital safe and available to deploy for a better opportunity once everything has bottomed, or once the market is signaling that we are ready for a more extended move to the upside, which at this point in time, like I've shown you, isn't the case just yet. If you enjoyed this video, please smash the like button. Please do subscribe down below, because I try and make these more regularly or as much as possible. So click the subscribe button, click the notification bell, get on my email list so I can send you these updates whenever they come out, because they are pretty important. And you don't want to miss them, because it just gives you a better edge in the market and it helps you make more money to be able to navigate these markets more profitably. And of course, if you want daily analysis, you want access to me personally, you want to join our private Discord chat group where I literally share insights and charts and data every single day, you can get access to that. And our 1,500 members from all around the world, we're all in there trying to navigate these markets and try and extract as much money and value as possible. So if you want to join, you want to become a VIP member, click the second link in the description down below. You'll be able to sign up. It's risk-free for 60 days. Come and join us. Come and learn and improve your understanding of these markets. And of course, that will help you navigate these markets more successfully and more profitably too. Thanks for watching. I will see you in the next video.